Hello and welcome to our weekly update. It's Monday, July 13, and we're here to see what's happening in the market. Together, we can check the news, economic data, and market reaction to these data. And then we will see what's happening. After that, we saw what's happening in the market. We can check the week ahead as well. We know that we are at the beginning of week 29, 2026, that the very important week, especially for the stock markets, as we're going to have second quarter's earnings started. Actually, it's started last week with the positive data that we had from Delta Airlines, but still, this week, that's the main importance. I mean, the first, officially, we can say it's going to be the first week because the most important banks and especially the TSM this week I mean, most important banks in the US, especially that just like Bank of America, Citi, Wells Fargo, and also especially the TSM. Those are the most important companies this week that they're gonna publish their reports, and all of them they are the kind of the companies that we can be positive about them. And this positive outlook that we have for the earnings can help us actually to have somehow the positive expectation from the stock markets as well. So anyhow, the last week, well, just like mostly the stocks closed higher as still everything was fine. This week, especially in the weekend on Saturday, Sunday, and still now on Monday, we now again the geopolitical tensions between United States and Islamic Republic based in Iran increase, and Iranian I mean better to say Islamist in Iran because there's a big difference between Iranian as a people in Iran, people of Iran, and this less than 15% uh, hardliners, stupid, crazy guys that are leading the country. They attack again to the navies, to vessels, sorry, in Persian Gulf and in the Strait of Hormuz in recent days, twice. One for if I don't mistake, it was from the Cyprus and other one, I don't remember from which countries. Anyhow, those attacks increase the tension and in reaction, United States say that just like what, especially the last week, also Donald Trump said in NATO that from his point of view, this UMO that they had, or OMO that they had, it's over. They don't have any negotiations right now. He said that negotiations can continue, but I'm not positive about that. And we don't have any ceasefire there, nothing around here. And ceasefire is over. They recovered back, reversed back all the sanctions that they temporarily have lifted for 2 months. Again, they're back on the table. Anyhow, the situation increased the tensions, and these tensions means that again we can be negative with about the stock markets. Mostly, we can say somehow more cautious about the stock market. Again, these earnings can change the situation in the market the next days. Anyhow, Dow Jones is somehow the flat, slightly down, mostly because the banks and military-based stocks they can support the Dow Jones. On the other hand, S&P 500 is down by 0.3%, and in Nasdaq was almost losing by almost 1%, mostly because of the lower price of tech companies that we had, AI and tech related companies that we had. One and on the other side, the higher oil price again increased the this concern about the higher inflation because the higher oil price, especially if we can see WTI, if we can see especially the Brent oil between 78 and $80, that can increase, especially if it can increase above $80, that can increase the expectation of higher for longer, and that can be really negative for tech companies. The same situation we had in Asia, especially in Japan and South Korea, AI-related companies and tech-related companies put the Kospi in South Korea, more pressure on the Kospi in South Korea with almost 9% down, while in Nikkei Japan lost 1.8% almost. But the other markets in Asia, they were flat and somehow the positive, especially in India Nifty was flat, but Chinese FTSE 50 increased by 0.8%, and Hang Seng, Hong Kong increased by 0.2%. Looking at the commodity market, let's go to the commodity market and then we can go to the bond market. The commodity market, gold price is down around 4,060-70 US dollar from morning, more than 1% lose, and still trading in that area, while the energy price, WTI, has increased by 3.5%. Same Brent oil, 3.4%, but still they are increasing. That can increase the tensions in the market, in energy market, and increase the concerns about the inflation. So the crude oil is trading around 73, 78 $4, while the Brent oil between 78 and $79 up and down. The silver is down around $58.8. On the bond market, if we want to understand what's better, just like if we want to better understand that what's happening in the market, we better look to the bond market. US 10 years bond yields again is up to 4.57%. That's crazy. Look at that. Just right after, just like 2 weeks ago, when just like Islamic Republic in Iran and the United States, they had this agreement for 2 months. We saw the bond yields down to around 4.34%, and now it's again back to 4.57%. That's crazy. That means that risk premium in the market is so high, and this higher risk premium in the market can be very negative for the stock market, for the crypto market as well. In Japan, also 10 years bond yields increased higher to 2.78%. That's also a high number, looking just like telling us much. In the cryptocurrency market, the Bitcoin is under pressure under 63,000, but still, as long as the Bitcoin is trading about 62,000 US dollar, we can still be somehow positive about this market, but not much. And while the Ethereum is down almost more than 1%, 1.2%, 1.1% down to $1,780 almost. Generally, the cryptocurrencies market, the Ripple is back around $1. That's crazy. Generally, the cryptocurrency markets are negative. I'm not that much positive about the cryptocurrency market, and cannot be that much positive about that for now. But still, I mean, especially about the Bitcoin around about $62,000, it can be somehow positive. Before going forward and check the week ahead, let me review shortly what we had last week. Monday started with the S&P, the most important. I will review the most important numbers. The most important numbers was German factory orders increased by 1.9% in May after falling by 3.2% in April. While S&P Global and ISM, both numbers for the manufacturing and the service sector, they showed us that generally economic activities in both sectors compared with the May slightly eased in June, but still compared with the US economy, European economies, compared with the China, still there's a good numbers. I mean, S&P for the service sector is a 51.2 for the S&P Global, and while the non-manufacturing sector for the ISM is still the 67.7. Yeah, lower than 671.3, but I mean, still good. But compared with the US economy, it was like it was in June, it was the numbers, they were weaker than previous week. Last week, we had the central bank meetings in Portugal, and we had very important speeches from the most of the central bankers across the board. Especially, we had Kevin Warsh. It was just like it was attending there. He was attending for his first international meeting as a Fed chair. Instead of almost just like for 8 years we were sitting, we were seeing Fed chair Powell. So still, it will take a time to replace the Fed chair Powell with the Fed chair Warsh when we were talking so fast about the economic situation. Anyhow, continue with that. But generally, the most just like what we could understand mostly from the speeches that we had last week, especially from United States, that just like Warsh and other Fed members that they had a speech. Mostly it was about just like more hawkish, and they were more worried about they had more concerns about the inflation, which means for now still the market doesn't count on any rates cut for 2026. So that was what we could better understand from what happened last week. This week and the week from the second half of this week, the speeches will be out just like 10 days before next Fed meeting. Is like start from the Friday. If we're gonna be, we will enter to the just like just 10 days before Fed meeting off Zoom, and none of the Fed members, they will not have a right to have a comments about the policy, monetary policies. So these days also we're gonna just like in the weekend also we'll have some speeches, not too much, but we'll have some speeches that we have to watch. But generally, what we could understand from the speeches so far we had, and also the Wednesday's Fed meeting minutes that we had from the previous meeting. What we could understand, just like Federal Reserve is still hawkish. Mindset is still hawkish. They are still thinking about just holding the current rate for a little bit longer. In United Kingdom, the mortgage rate stayed unchanged at 6.6% for June, still the high. That's why uh, let's say in this say just like UK housing market compared with the other European economies is still fine. But if you compare that with the UK economy, with the UK housing market data with the previous years, it's still down. So that's one of the reasons the higher rates in the market. And we had trade balance from United States and Canada, and last week also export in United States didn't increase as much as the import increased. That's why the trade balance was not so good. Better than expectations, but not much positive. Last week we had both EIA and IEA monthly reports. In the weekend, we're gonna have the OPEC monthly report. Both, I mean, if we could just like, I will say shortly what both of these monthly reports they were telling. One of them that we have to, one of the notes that we, one of the important stuff that we have to watch is about the gas demand. Like if you remember in the past 2 years, I was talking about the silver, about the one of the great opportunities for the investment. Now the gas is taking the silver position that's what silver had in the last 2 years. So the gas is important in both reports they were talking about the gas and how the gas can be important. On the other hand, we know that just like refinery, just like energy, what we call it, just like the energy production factories, but I forget the name in English. So just like producing the energy, electricity, especially from the uh, from the oil is getting lower, and now just like most of the economies, especially after the recent tensions that we had in the Middle East, many economies, especially in the United States, also they're looking about the other sources of the energy. So that was also another thing that it was important. Both EIA and IEA, they are expecting that demand for the third quarter and the fourth quarter to slow down for the energy, for the oil. That's also what is important. But both of them, they are also expecting that at the end of 2026, we will have more support, more supply than demand, which can be negative for the oil price. But they increased slightly again their prices for July. After that, they lowered their prices for June. So it's like they're still thinking that the concerns are there and it's not over. On Tuesday, we had API weekly report, and the next day on Wednesday, we had EIA weekly report. Both of them, they showed that the US inventories no, just like fell less than expected, mostly because that the United Strait of Hormuz had a more supply. We had through the Strait of Hormuz. Be Before the war, it was 11 million barrels were passing every day. After the war, so it lowered than less than a million barrel. And now, yeah, if you don't count in the past 3 days, it was back again around 4.5 million barrels a day, which that caused less demand for the U.S. I mean, just like we had more supply generally, so that's why the United States had the less pressure to export his own oils to somehow to balance the market. There are so many rumors that the U.S. Oil inventories is in very just like dangerous areas, dangerous zone, which is not right. Still, just like yeah, compared with the past 5 years, it's lower than the middle of the past 5 years, but it's not in just like area that we say, oh, that's going to happen. The worst thing, you know. So these rumors about the lefties um, journals. They were amazing. The Wednesday we had a central bank meeting in New Zealand. New Zealand and Australia, usually we're talking most, just like when we were talking about this, those economies so close to each other. So usually we compare their policies together. In Australia, the rate is around 3.75%. That's a high. That's why Australian Central Bank has a less room to move further if it's needed to increase the rates. But in New Zealand, since the interest rate was around 2.25%, higher inflation expectations that after this increasing the energy prices led the central bank in New Zealand to slightly increase the rates, and now we can see the rates around 2.5%. So again, Thursday we had inflation numbers in China. We had concern. We should just like the numbers bring us some warning, but at the same time we had a positive news as well. The warning came on the monthly inflation numbers. We know that CPI fell by 0.3% on a monthly base. Annually, again, it's slightly lowered to 1% from previous 1.2%. But on the other hand, if you look at the inflation, just like producer price index, like inflation for the production area, we can see it increased by 4.1%. When the production is getting slightly more expensive, it means that producers they have to pass this inflation to the consumers, and the point is here, when we have this situation, just like 4%, it means that if you have this like PPI around 2%, yeah, we can say that sometimes the producers they can somehow lower their profit and don't pass higher prices to consumers. But when you have the inflation around 4% or above 4%, it means that you have, I mean, the producers also will be under pressure. They will have a less profit. So to somehow to cover themselves, they have no choice to pass these prices to the consumers. So that means that the consumer price index in China, again, even if it fell in June, in July, and probably in August also can be still a positive. Malaysia held the rates interest at 2.75%. In Mexico, inflation fell. That falling inflation in June, it was something that happened in China, happened in Mexico, happened in Germany, and we're expecting to see the same trend for Eurozone and United States as well in the BK. Mostly because of the oil price and energy price. We know that in June the energy price almost $30. It was lower than its highest level that we had 2 months ago. So that supported somehow the inflation. In the same trend that we had in Mexico. Annually, it's around 3.4%. On the monthly basis, fell by 0.3%. That was something that happened in most economies. In United States, initial jobless claims, say just like around 2.15 thousand, slightly less than 2.70 thousand, and continuing claims just like slightly increased from 1,806,000 to 1,814,000. Still, these numbers telling us that the job market is positive. The job market is still fine. Somehow it's stable right now. And when you see the continuing claims around 1,800,000, it means that if you get unemployed, it's not going to be so hard to find a job. So that's fine. That says that the market situation is fine. The housing market was not good. Existing home sales fell by 2.4%. In the weekend, we're going to have the more data from the housing market. They're not too much positive about that. Inflation in Germany fell by 0.3% on a monthly base. Annually from 2.6% eased to 2.3%. In French, also prices lowered. In Canada, unemployment rate slightly got better from 6.6% to 6.5% for unemployment rate, maybe mostly because of current situation of the FIFA World Cup there. That can help somehow. In Russia, inflation increased, just like despite other economies. On the monthly base by 0.9%, annually by 6%. That was surprising in Russia. Week ahead started today with Turkish retail sales, somehow slightly increasing by 2.4% monthly, 13.7% annually. But again, these numbers means nothing because still if you count the inflation numbers, inflation can see that this retail is so weak. Anyhow, this week the market somehow the market focus will be on several things. One, about geopolitical tensions, what's going to happen between U.S. and United States, U.S. and Islamic Republic in Iran. One, and the second, earnings. Earnings will be very important from tomorrow. From tomorrow, the banks, important banks, especially the Citi, Bank of America, and others, they're gonna publish their their report, sorry, and that will be very, very important. You have to follow them. They will be the key to understanding the market situation. Tuesday, on the market, we're gonna have Chinese producer price index and also the Chinese trade data. It will be very important for the China before we're going to have the inflation numbers from the United States. Chinese export and import in the recent months have been increasing, especially what's very interesting that Chinese imports is increasing, which shows that the Chinese domestic demand is increasing, and that can be very positive actually for the Chinese economy, and can be the good news actually, because last year we had a lower demand in China. That lower demand in China somehow always it was negative. That was had a negative can say effect in the Chinese economy. Anyhow, these numbers will be important to watch. However, the most important number of the week, Tuesday, US inflation numbers, the inflation will increase, supposed to increase by 0.3% for core numbers. I mean, excluding the energy and oil prices, but headline, the total inflation is supposed to fall by 0.1% in June. Again, that's the same trend that happened in most economies. It's not just about the US. And annually, the core inflation should stay unchanged or remain unchanged at 2.9%, while the headline inflation is around 4.2%. We'd expect you to see that around 4.1%, 4%, because of the lower energy prices. However, that's still these numbers say that inflation is still sticky, especially the next thing on Wednesdays we're gonna have producer price index. That will be also very important to watch. As mentioned, the producer price index PPI also expected to stay unchanged for the headline, and core PPI expected to increase by 0.3%. We're gonna see around 4, probably headline numbers will be around 4% annually. Anyhow, Wednesday will be very important in other economies as well, especially in China and Canada. In China, we're gonna have just like bunch of the data, especially the industrial production, manufacturing production, Chinese GDP numbers. GDP year to date, from the beginning of 2026 so far, supposed to increase by 4.5%, less than 5% that earlier the market was expecting. I think the Chinese economy slightly should just like understand these numbers that like before they cannot increase like 10%, 8%. Now around 4%, 4.5% should be again the positive and the good numbers. Industrial production, manufacturing production, and also fixed asset investment. These numbers are also supposed to publish. Generally, putting together these numbers, I'm somehow the positive, natural to the positive, you can say better in this way, for the Chinese economy, while for the UK economy, I'm not natural, I'm negative for the weekend. But for the Chinese, I'm somehow the positive. Later, we're gonna have the central bank meeting in Canada. BOC is supposed to help the rates at 2.25%. Canadian economic growth, not that they don't have a concern, just like, they have problems, but it's not just like a concern that they should act something right now. On the other hand, the inflation also is still unacceptable levels around 3%. That can tell us that the 2.25% rates can stay there with no expectations of changing. Beach Book will publish on Wednesday. Make sure that you're gonna read that. In Economics website, we usually publish this report, and also we're gonna have usually some how can I say reviews on that and analyze on that, and we'll talk about that. So it's very important. Try to watch it. It's gonna try to read it actually, and it's very important. It'll give us better idea of what we can expect from the central bank meeting, for the reserve meeting later this month. Again, the UK economy will publish the GDP trade data and industrial production numbers, manufacturers. on Friday, as mentioned, I'm not positive that much about the UK numbers. In United States, on Thursday, we're gonna have very important number, retail sales. The retail sales is one of the most economic indicators, uh, expecting to fall by 0.1% monthly base, annually increasing by 0.3%. Is somehow negative expectations, or we can say not positive expectations, but it's supposed to. I don't want. I mean, not to say I don't want, but I say I don't expect to see these numbers, especially because of the World Cup. Probably these numbers can be better than expected. And finally, Friday, the CPI numbers from Eurozone will be at the central stages. We are expecting to see inflation on the monthly base again in the Eurozone also fall by 0.1%. Same reason that happened in Canada, same as that happened in China and Germany, and we're expecting to see in United States. For Eurozone also it's the same, no matter. Annually, 2.8% CPI headline and core inflation at 2.8%, 2.8% for headline and 2.4% for the core numbers is expected to stay unchanged. Not bigger, not big difference there. And finally, housing market, the housing starts can slightly increase, just like we know that the last month it fell by more than 15%. This month's like maybe 1 or 2% can increase, not much, but building permits, again, we're expecting to see the falling down. The housing market, because of the mortgage rate around uh, just like again, around 6.5.6%. Uh, that can put the pressure on the housing market, That's why I'm not too much positive about the housing market numbers this week. These numbers will be the most important numbers to watch. Looking at the market and checking what's happening in the market. Let me start with the VIX chart. We know that the VIX, despite just like increasing and falling at the very beginning trading hours of the day, still it's around 17.15, telling us that the market is still so high. It's like 17.50. And you know what? That's other thing that we should care about, that's these levels somehow, just like before we were just like it was normal to see between 14 and 15, and now it sounds like the market risk is still always high. It's like long term we didn't see these numbers under 16, and that means that the risk premium in the market is so high still. And what we can see in the market, which means increasing numbers that we see in the market, that happens with the expensive money. And if any crash happens in the market, that's going to be the hard crash in the market. Don't forget about that. Don't forget about that. It's very important. US dollar index, around US dollar index is around about 100, around 100.7. Earlier today it was around 101. Generally, we are still positive about the dollar index. I just expect to see the dollar index about 100. For the gold, natural slightly look just like negative, but for the midterm and the long-term gold and the silver, I'm still buy for them. For the energy market, despite fall off, look, don't forget, the government, just like even though the IE and EIA are both expecting we have the less demand, still for third quarter, don't forget that the many countries they use their reserves oils in the last 2 months. So the demand in the market is still so high. Maybe for the daily demand, supply and demand is somehow good, but it's still we have still so far that those levels that we say that okay, we already refilled all the reserves and now we're in a standard demand market. We are not in a standard situation in the market, and also for the short term at least, it's hard to believe that the tensions in the Strait of Hormuz is going to finish that fast. So energy price, I'm still positive. When you are about the energy price are still positive, you're thinking in this way. And I don't expect to see an energy price around $100. No. But I don't expect to see $180 again. Between 78, $80 can be something that for the Brent oil, that's for the WTI. For the Brent oil, I don't expect around 78, $80, which means higher energy price can increase expectations for the higher inflation, and a higher for longer can increase the rates, can increase especially the bond rates, can put the pressure slightly for the gold in the short term, put the pressure on the gold and stock market, especially the tech and AI related companies. For gas, I'm positive. The gas around 2.80, 2.8, $2.9. It's like good opportunity to buy. S&P 500, Dow Jones. So let's say in this way. I'm positive. No, I'm not negative too much about the Dow Jones because uh, overall expectations for the earnings are positive at the same time, especially the banks that we have there. And also military related stocks in the Dow Jones, they are also increasing fine. On the other hand, for S&P 500 and the Nasdaq, this shortfall in AI related companies, tech related companies can put some pressure on the stocks, but I'm not that much worried about them, especially with the earnings. Bitcoin, 63,000 around that. Above 62,000, I'm still positive about the Bitcoin, as mentioned earlier at the beginning. Under that, can scenario change. But for now, higher risk. I mean, even if I say that I'm positive above 62, it doesn't mean that I expect to see the prices so increasing. But I don't. It means that I don't expect to price to fall lower. That means just like somehow I'm positive about the short term. But I'm not that much positive about the cryptocurrencies market so far now. I mean, I don't see any specific reason that can say, okay, that's why cryptocurrencies market can increase and prices can be higher. Okay, that was what's happening in the stock market and what's happening and what we're expecting to see in the week ahead. Hope it was useful for you. Talk to you soon, maybe tomorrow or the day after. Have a great week.